Ever feel like you're staring at one of those menus, with like 1,000 different things,
Right.
and you just want like the one simple thing, like picking a mutual fund.
Totally overwhelming, right?
It can be so overwhelming. So you want to decode this whole world of mutual fund schemes. Well, you're in the right place.
That's what we're here for.
We're going to break down some of the main categories today.
Yeah, get your biryani versus your butter chicken straight.
Yes, exactly. So we can tell the difference.
Exactly.
Okay, so our sources start with one that I feel like we hear about all the time, which is the equity schemes.
Yeah.
They sound so bold.
They do sound bold.
What are they all about, and why do we keep hearing terms like thematic and contra?
So equity schemes are about as bold as a Bollywood action hero.
Mm.
They mainly invest in stocks,
Mm.
which is basically buying a tiny little piece of lots of different companies.
Okay.
And so with that comes the potential for higher returns.
Yeah,
But just like any good action flick, there's also some risk involved.
right.
Makes sense.
Exactly.
Now, thematic funds
Yeah.
are like those specialized missions.
Mm.
So imagine a fund that only invests in companies that are developing flying cars.
Okay.
That's thematic.
So if I want to bet on flying cars,
That's where you put your money.
thematic
You
fund.
got it.
Got it. Okay, what about contra?
Contra.
That sounds like those characters who are going like against the grain.
Yes, exactly.
Yeah.
So they operate on the idea that sometimes going against the crowd can actually make you money. When the market is down, they might zig when everyone else is zagging, looking for those kind of undervalued opportunities.
Okay.
But of course, this requires really understanding the market.
Yeah.
Just like our Bollywood heroes need those really clever plans.
Right. Exactly.
It's all connected.
It all comes back to Bollywood somehow.
Always.
Okay, so contra funds. Who would be interested in something like that? Because that sounds a little bit intense.
You're right. It's not for someone who's afraid of a little bit of risk.
Right.
Contra funds are for investors who have a higher risk tolerance.
Okay.
They're comfortable with the market going up and down,
Right.
and they're really looking for potentially higher returns,
Yeah.
but over a longer period of time.
Makes sense.
They like a little drama,
They like a little spice.
a little spice.
Yeah. Okay, so we've got equity schemes, which are for those who like a little bit of spice in their life.
Right.
But what about someone who wants just like a nice, comforting bowl of lentil soup? What would be the equivalent in the mutual fund world?
You're speaking my language now.
Okay.
That's going to be your debt schemes.
Okay.
They're exactly like that warm bowl of lentil soup. They're comforting, they're reliable,
Okay.
and they're generally considered lower risk.
Okay.
So with debt schemes, what you're doing is you're lending money to governments or corporations,
Got it.
and they give you interest payments in return.
Okay.
So you're not going to see those really high returns like you would with equity,
Right.
but you'll sleep better at night knowing that things are generally going to be okay.
More of a safe and stable.
Exactly.
Okay. Are there different types of debt schemes?
There are absolutely different types of lentils, if you will.
Okay, I like it.
So you've got your overnight funds.
Okay.
Those are like the quick bite. They're perfect for if you just need to park your money somewhere really quickly, just for a very short amount of time.
Like literally overnight?
Exactly.
Okay.
Then there's liquid funds. Imagine like a slightly more elaborate soup.
Okay.
They give you a little bit more flexibility and potentially a little bit of a higher return compared to your overnight funds.
Okay, got it. So those are your debt schemes. And we've got our equity schemes. What if I want both?
You want to mix it up a
Just a
little.
little bit of spice, a little bit of comfort.
You want the fusion?
Yes.
Enter hybrid schemes, the fusion cuisine of the mutual fund world.
Ooh, I like it.
They combine both the equities and the debt together, and they aim for this nice balance of risk and reward.
Okay, so tell me a little bit more about these hybrid schemes because it sounds interesting, but I don't really know how they work.
Yeah, so it's all about finding the right blend. You have things like aggressive hybrid funds, and these lean more towards equities, so like 70% equity and 30% debt.
Okay.
So you still get a little bit more of that spice.
Okay.
But then you have things like conservative hybrid funds. Those might be more 60% debt, 40% equity.
Okay.
So it's a little bit of a milder flavor profile.
Got it.
And then there's the chameleons of the hybrid world,
Okay.
the dynamic asset allocation funds.
Ooh, that sounds fancy.
Right. These ones actually actively adjust how much equity and debt they have based on what the market conditions are.
Oh, wow.
It's like having a chef come in and be like, you know what? I'm tasting the soup right now.
It needs a little more of this.
It needs a little more of this. Exactly.
Okay.
So they're constantly adjusting
Interesting.
to try to get that perfect blend based on what's happening in the market.
So with all of this being said, how do I know which one is right for me? I feel like you've given me this whole menu.
Right.
It's like trying to choose between a dosa and a biryani. It's like they're both delicious, but they're very different.
That's the million-dollar question.
Right.
And the answer, like with most things in life, is
Yeah.
it depends.
Of course.
It really comes down to what are your financial goals?
Hmm.
What is your risk tolerance?
Yeah.
How long are we investing for? Are we saving for a down payment on a house? Are we planning for retirement? Or are we looking for an emergency fund?
Right.
Each one of those things is going to kind of require a different approach,
Makes sense.
different dish on the menu.
I like that we've brought it back to food.
Always got to bring it back to food.
This has been so helpful. We've gone from being totally confused by the menu to now understanding like the key ingredients and flavors.
Exactly.
So thank you so much for breaking that all down.
You got it. Happy to be here.
And for you out there listening, if you were to build your perfect investment, like Thali or Platter, which mutual fund categories would you include and why? Think about it.